Welcome back to another CPI report. I feel like these are flying by. I feel like how are we already on another inflation report? And then tomorrow we have PPI. It's crazy. And then we really get into the earnings season. JP Morgan, for example, tomorrow. But this is really interesting. We're up against CPI. Expectations are low for this CPI. Usually, when expectations are low, there's a chance of beating them. What we really would love to see, and it would be great for stocks too, is low inflation here, right? And the way we might actually be able to push some lower numbers now would be if we get that housing number down, the housing inflation figure down. That's what we'd be looking for. It's possible. And I mean, if we look at market rents have come down. It's been this honestly, it's probably taken a year longer to actually get some of these rental rates down than expected, and to then end up showing up in owner's equivalent rents. So it's been a slog on this one. This has been probably where the most patience has been required, just waiting for housing services to come down. It's crazy. So today's report will give us some insight into progress on housing services. I think that's really the big one that the Fed is watching right now, is housing services. Mostly because they don't seem to be worried anymore about services inflation. They don't seem to be worried anymore about goods inflation, although they haven't been worried about goods inflation for a while. So really now it's just a matter of housing, and we're gonna get that data in about 2 minutes. It's actually kind of a cool thing that you get this data early, mostly because sometimes you get data that comes in at 7 a.m. and we have to wait 30 minutes past market open to actually get the data. This data comes out in just 2 minutes. And then we have PPI, which will come out tomorrow, along with the University of Michigan sentiment. And then, of course, today's Robotaxi Day, which will be very exciting, obviously. We'll be covering it. You're welcome to tune in and watch it with me if you want. I think it'll be really fun. No matter what happens, I'm really curious. I'm really interested. I want to see innovation. I want to see newness. I feel like it's like an iPhone product launch event almost, and I want to get excited about it. So we'll see. But anyway, first we're gonna start with the CPI report. The CPI report expectation is that we're going to get 0.1 on the month-over-month, 0.2 on the month-over-month core, year-over-year 2.3, and year-over-year on core 3.2. Now, worth knowing, this will probably, we'll have to get into the weeds of the averages here, so keep that in mind. So we're going to have, and it's going to take a moment to get through all of the details. But we want to get through some of the averages, like the, how deep was that core number? And so we'll do all. Okay, here we go. And the data is little higher on the month-over-month, little higher on the month-over-month core, little higher on the year-over-year, little higher on the year-over-year core. Everything is up higher by 0.1. 0.1, every single item. Now let's get into the details. Let's get them. Let's listen in here first.
Hitting the wires. Expected to see a headline up 0.1%, comes in up 0.2%. If you strip out food and energy, up 0.3%, which of course equals our last look. To find a bigger number, you have to go back to March when it was up 0.4. But do keep in mind, June was up 0.1, July was up 0.2. So this has been running a bit on the warm side. Now, if we look at year-over-year numbers, 2.4, hotter than expected. but 1/10 cooler than the rear view mirror, and it continues the streak of these numbers year over year on the non-core moving lower. And if you look at 2.4, just like 2.5, it comps back to February of 2021. Now, if we look at what's going on with respect to year over year core, which starts to get into some very important numbers here, this one's warm as well. 3.3. 1/10 warmer than expected, 1/10 warmer than the rear view mirror. It equals June, but of course the last 2 months have been 3.2. Now, finally, if we look at the indexes, and I think the indexes are very important, the index for the headline number, 315.301, another all-time high. If you look at the core, 320.
Okay, well, hold on a sec. Saying another all-time high makes it seem like we're not in deflation. You know, of course the numbers are going to come in positive. So that gets a little silly. Like those index numbers he's talking about. I did end up getting the full report, so let's go through the actual report. The far right is going to be our August to September data. So let's go through some of that. Miscellaneous personal services at 0.2. We've got, let's see here. There we go. Looks like financial services up 0.4. That's a little higher than usual in the same month that we started offering financial advice at stockhack.com. Sorry. It's a really good service, but it's not the cheapest. Then other personal services, 0.1. Postage and delivery down. That's fine. 0.1, 0.1. None of this so far is really hot. I want to find out where this is coming in. Recreation services, negative 0.5. Honestly, a lot of this so far is negative. Public transportation. Okay, what's going on here? Why is public transportation up 2.4? Is it all the government workers that were hired? No, it was airline fares. How? How are airline fares coming in this high when Delta this morning missed? That's really interesting. Okay, so I'm going to put a little X there. Why are the airfares moving up like that? That's a little odd. Motor vehicle fees. Okay, that's like government related. Yeah, parking and other fees? Are you serious? Jeez, motor vehicle fees, like parking and tolls, basically. Okay, car and truck rental at 1.2. Transportation services 1.4. This isn't ideal. Health insurance 0.4. Some of those definitely a little warmer there. Hospital related services, that's okay. Medical related services though, look at that. We had 2 months of green there, followed by a 0.7, so a little pop up over there. Not great. Ooh, lodging away from home down 1.9. That's good. Okay, let's get into those rental numbers. Shelter. Oh, whoa. Oh, whoa, this is really good. Look at that collapse in shelter. Oh, it finally happened. Wow, that's actually really good. Finally. Oh, that's what we were looking for. Oh, that's fantastic. Finally, owner's equivalent rent is rolling over. This is a huge category. It's like a 30% weight in CPI. So this is fantastic news right here. That's very, very good. Oh, I love hearing that. That's great. Other goods, 0.3. Alcoholic beverages, 0.1. Yeah, that's pretty low because I think, what am I on now? Like day 20, no alcohol. So, yeah, not a surprise. That's probably going to go into deflation now. Education, commodities, negative. Toys are 0. Newspapers, negative 3.3. Sporting goods are negative. Pet goods are negative. Recreation goods, negative. Medical care commodities, negative. Used cars and trucks, 0.3. New vehicles, 0.2. These are nominal reads right here. Jewelry comes in a little hot, but footwear in general comes in a little hot too, 1.2. But if we just look at apparel in general, honestly, apparel had a little pop there. Yeah. Tools and hardware. What do we got here? Tools, hardware, negative 0.8. Household supplies, negative 0.3. Appliances, negative 0.6. This is all deflation. There's so much negative here. This is great. Household furnishings came in flat. That's fantastic. Energy was actually negative. This is good. Like, so airlines, I mean, there's so much negative here. And the fact that owner's equivalent rent is now rolling, this is fantastic. So how did the number come in high then? Let's figure that out. Because to me it looks like medical care services and transportation services were the problem. Yeah, I don't know how airfares came in 3.2% higher. That's kooky. That's it though. That's very narrow. That's very, very, very narrow. So medical care, care services hotter, and transportation services hotter. Specifically, parking and other fees, which is just ridiculous. So one of these is seasonal. And the airfares and airfares. Airfares are usually seasonal. The other two, I don't know. That's where you've got some lingering inflation. Okay, interesting. So, I mean, to me, this is actually a pretty damn good CPI report, honestly. I know it's a beat, but that's pretty good. I'm gonna go through some of the details here. Okay, so, how am I gonna do this? Okay. Okay. Let's see here. Okay, I want to see what the suits are saying now, because I always like to challenge my own opinion. I think that's very important. I try not to just study what aligns with me. Medical care, clothing, and airfares also pushed higher. Oh, then now they're just copying me. What's up, Bloomberg? Yet another sting from motor insurance. Yep. Saw that. So let's see here. Higher than expected to should take any chance of a 50 off the table. No, I think that's gonna come down honestly to the next jobs report. Owner's equivalent rent, the smallest since June and the second smallest this year. Let's see, year on year, blah, 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 blah. Okay, that's not very useful. Let me go look at some other sources. Oh, it's our boy Mohammed. Slightly hotter than expected. Oh yeah, and we got the weekly jobless claims, I suppose, too. Let me get those. I didn't even read those out. I didn't even look at them, honestly. Oh, yeah. Okay, 258K versus the initial expected of 230. And then the continuing claims of 1861 versus 1860, or 1830 expected. Aha! Now, this is interesting. Okay, I mean, that could be unemployment related due to the hurricanes, obviously. But that's really interesting, because now you have this sort of like odd combo. Okay, so you have warmer CPI and higher unemployment claims. That's kind of like the stagflationary fear people have. But that's very interesting. Claims 258K versus 230K. And you know I'm not a big fan of the claims number anyway. Expected versus 225K prior. But remember, we should really digest this from the point of view of what we think the Federal Reserve will do. My take here is that Fed will cheer falling shelter inflation. Fed likely recognizes that motor vehicle insurance lags, right? As do medical care services. And then outside of those, yes, we also had higher parking, which was weird, higher parking and airfares. But parking might lag and airfares are very volatile. So overall, I actually think the inflation report so far is very good. I want to get into more of the details here. Like, did they round up on that 0.3? I want to find out. Let's find out. Oh no, it did come in at 0.31. The expectation was like 0.24. So it was a little warmer. But my take is that, and we'll get super core in just a moment as well. The rollover in owner's equivalent rent will be very exciting, as we've been waiting for it for, I mean, honestly, like years now. It's weird to say years. That's just crazy. We've been doing this together for like how long now? This is crazy. So yeah, parking at the airports. There you go. That's a funny comment. Okay, but what matters here more is going to be to the Fed. I don't think the CPI matters as much. What's going to matter more, what will matter most, will be the unemployment reports. And really, claims ticking up here. Oh, you did have a downward revision, though, in continuing claims. But people could fall off that list, too. Continuing claims. I'll explain that. So continuing claims came in at 1861K versus the 1830 expected versus the 1826 prior, revised down to 1819. So you had a 7K down revision. One of the problems with continuing claims is that once people are 27 weeks unemployed, they fall off unemployment insurance, which is bad. And 27 weeks unemployed, that number, people get tired of me looking at this, but I think it's a very important number because if you look at this chart, it only goes up in a recession. Okay, so I'm just going to look at thousands of people monthly, seasonally adjusted. We went up. You went up by 97,000 people. 97,000 people rolled off. So let's write that down. Last month, 97,000 people rolled off unemployment insurance, seasonally adjusted, to 27 weeks unemployed. Trend continues up. It's not ideal. So the CPI report, mostly I actually think we can look through a lot of this. But this hit on unemployment claims at the same time might be what's dragging the Qs down a little bit here. Because, the last thing you really want, at this point, I think markets care a lot less about inflation because it's the trend. Let's look at like the Nick T trend, for example. He always gets these trend charts up pretty fast. The issue is employment, and I am very nervous about employment. I think you all already know that, though. I don't want to sound like a broken record here. Boring Kevin, broken record. We've heard it before. Okay, but let's see here. So where is... Okay, here we go. So Nick T is right here. Core CPI rose 0.31 in September, a touch firmer than most estimates. That's true. 12-month rate ticked up. It's not ideal. And the 6-month rate ticked down. Okay. 1. And then the 3-month annualized rate ticked up. And then shelter printed at 0.2. Okay. Well, usually the Powie Wowies in them, they're going to just look at this 12 and 6-month trend here. And I think the average is pretty well down here, eh? So that seems to be at least what the Fed pays attention to, is the 12 and 6-month trend. Okay. And this is headline. Headline 6-month was the, wow, headline 6-month and the headline 12-month. Lowest since February of 21, lowest since September of 2020. That's incredible. So, That's pretty good. And again, you did get a little bit of the uptick though in core, so now it's going to be a jobs concern. All right, let me see what else is being said out there. Let's see here. Okay, so yeah, that I find very interesting too. Somebody just made a comment. Despite the emerging narrative around airlines losing pricing power, I think there are very few companies with pricing power right now, just going into sort of this environment that we're in. But that'll change. That could change after the election, or that'll change at the beginning of the year. Because you have to balance pricing power with valuations, right? Because you could argue that Costco has pricing power, but the valuation is nutty. And I'm not trying to bag on Costco. I do like Costco as a company. I just don't like their valuation. But yeah, that is very interesting, especially in the face of Delta earnings, which I suppose if we look at Delta earnings, let's see here, Delta earnings. So if I quickly jot down some Delta earnings here, I think we'll have a good perception of what's going on for airfares. So let's see here. Delta comes in with, I gotta do math this early. That's 25 divided by 2, 172.5 Q4 adjusted EPS forecast versus 1.78. So what is that? 1725 divided by 1.78. Oh my gosh. 1.78. It's a 3% miss. Okay, 3% miss on guide. I always think it's easier to put this in a percentage. Delta Airlines adjusted net for Q3 beat. Passenger revenue missed the... Oh, no, I'm sorry. Adjusted net missed as well. 971 divided by 980.8. Adjusted net. Q3 adjusted net missed by 1%. And passenger revenue missed by, that looks like less than 1%. Yeah, it is. By about 0.45%. Q3. Passenger revenue miss. So it seems like a little bit of a nominal miss here, but it's still a miss, right? I wonder what Delta's doing now. DAL. Delta. Oh, it's only down 65 bips in the pre-market. Big deal. Okay. So, yeah, this puts a highlighter again over labor. Let's see what other numbers we have here. So, CPI, I want to see any revisions. No. Okay. Each CPI category, 0.1% higher than expected. And that's going to be, let's just write that down. We've got CPI month over month, CPI month over month core, and then we have the year over year and year over year core. Okay. So month over month at 0.2%. It would have been nice if this would have come in lower, honestly, just to show that the inflation fight is over, but it is not. Although I do think the components here are a little silly, and we'll get some bouncing around. And the trend is still pretty clearly down. And I think that's what's really going to matter to the Fed, because now they can focus on the jobs. See, remember one of the things they said in the Fed minutes yesterday was, once unemployment starts rolling up, and like once jobs start rolling over, your ability at the Fed to fix that damage is extremely limited. Like there's a huge lag in when lower rates from the Fed are gonna do jack bahoonies. And that's bad because it means the Fed's not really going to be responsive to, bad jobs data. It just basically means the economy has to absorb it, right? CPI you can respond to. So, I mean, I think that's worth noting. So I'll say maybe important note, Fed actions to boost employment are very lagged and very slow once unemployment starts rising and companies start doing more with less. High inflation can be fought more rapidly with rapid increases in rates. But, this trend here, the 6 to 12 month average, 6 to 12 month average here is fine. Danger would be these. So a danger next month. Danger, I'm going to write that down. So what you want to see next month. Danger next month would be shelter inflation reignites. And then medical and transportation keep going up. And car insurance keeps going up. That would be the danger for next. Let's look again at that shelter segment. So, yeah, I mean, this is great. Shelter, 0.2. Rent of shelter, 0.2. Rent of primary, 0.3. Finally getting the rollover. Lodging away from home, negative 1.9. I mean, that's part of the category here of... Oh, which category is that in? Is that a subcategory? Hold on. I don't even know what that's a subcategory of. So how am I going to do that? Can I copy that? I need to know that size. Oh, that's very inconvenient. Oh, copy. Okay, lodging away from home's that size. Now how do I paste? There we go. Okay. It is... Oh, it's part of the rent to... Is it part of the rent to shelter? I don't think it's part of rent of primary. It doesn't really align. Maybe? Rent of primary? Lodging away from home? I should make this a little more perfect. Right to the line. Right to the letter. So I'm trying to understand what subcategory that is. Let me paste a new one here. And then we'll get rid of this one. Lodging away from home is part... Oh, it's part of rent of shelter. Okay. I was going to say, it's not part of rent of primary. Yeah, it's part of rent of shelter. Interesting. Okay. Lodging away from home is a fraction the weight, though, of rent of primary, right? So rent of shelter is 7,686, and then I need to go lodging away from home, which hotels and motels got whacked. And then here's your owner's equivalent rent. That's a big chunk. But I mean, it rolled over. Yeah, I mean, I think that's just a good thing to look at. This is good. Yeah. And then when you add all of that together, you get 36. So you have 36.109, 7.686 is rent of primary. Then you have 1.48 lodging. Then you have owner's equivalent rent at 26.9. Does that all add up? It should. Yeah, it's about 36%. Yeah. Okay. All right. So the lodging component is actually very, very small out of all of that. The lodging component, 1.486 divided by 36.1. the lodging component's only 4% of the rent of shelter number. Lodging equals 4% of rent of shelter number, which means owner's equivalent rent 36 is about 74% of it. Is 74% of rent of shelter. So the vast majority, I mean 2/3 or 3/4 here, is rent of shelter. Okay. All right. Very interesting. So, anyone here living through the hurricane? I feel so bad for what's going on in Florida. Oh dear. Okay. I mean, that'll hit some of these unemployment claim numbers too. So I'm gonna write that down. Probably, or I mean, this is on the weekly. Might be some hurricane numbers in this, possibly. And yeah, I guess we'll see. Okay. Somebody's wondering where Gabriel Green is. And Lieutenant Dan. Kevin, I missed the start. What do you make of the report? I actually think it's decent. I realize the numbers all came in 0.1 higher than expected. But when we go through the actual report, it distills mostly down to airfares, car insurance, which lags, and then medical care, which also lags, and then like parking, which was crazy. But shelter inflation reigniting would be bad, and this one very much lags. But so far that one comes down too. So really the categories that are left here, very, very lagging, with the exception of the airfare item. So, but I think it's worth writing that down. Driven by airfares, medical care, transportation, mostly parking, and car insurance. Airfares can be seasonal, medical care, and car insurance lag. Okay, that's fair. All right, so what's super core? I think that's going to tick up here as well because of that transportation boost. That's probably mostly going to be pop. Let's see here. Where is the core? There it is. Super core CPI. Yeah, the transportation service just smoked this. There's Zero Hedge did that. They always do a good chart on this. So here's your super core year over year. You can see the downtrend is pretty, it's there. You had a little pop up at the beginning of like this year, January, but we all remember that. But this is interesting. You've seen this volatility in these numbers before. I mean, look at this. Even over here in 2020, over here, here. Like, this volatility is not a surprise. In fact, it's kind of hard to sort of draw a line through super core. It's all freaking over the place. But boy, it certainly got pretty low this summer. But what a volatile number, huh? And I mean, look at the big part of the bar. If it wasn't for car insurance and parking, transportation services wouldn't be that bad. Medical care services make a big portion of it. And that was kind of it. That's most of that. Medical care and transportation. Volatile figures. This is more useful because you smooth this out. It does show you there can be upticks. You know, like we had at the beginning of the year, you can get upticks on dips. So it's not to try to discredit this, but I mean, look at that. How do you fit a like? Where's the line of best fit there? You know, that's a oh really? You're gonna do that to me again? HDMI disconnect. I don't know. It does make me wonder. It's probably the cable. Oh well. So okay. So how's the market responding to this? 1, 2, 3, 4. Let's just deal with that. Unplug that. Okay, there we go. Okay. And on top of that, oh, I guess let me check here first if there's any other commentary on this. Oh, there is a note on unemployment claims. Now that's interesting. Unemployment claims. This is the not seasonally adjusted figure. Oh, I can't show it. Darn it. I plugged that HDMI in. Mostly Michigan. Oh, well, that sounds like... I wonder, is that... Do we get strikes there? Michigan, and then North Carolina. Big jump in North Carolina. So... That's the second highest you've seen. So, yeah, that's probably an unemployment claims hit there. Okay. Well, that's worth noting. Oh, and then it looks like Goolsby's going to be up on CNBC soon. In here for
Your endless amounts of just use. I mean, look at this.
Stock was down stock was down 99 cents at 4 o'clock.
Yeah.
Then it rallied to being plus as people saw that Goldman recommended the stock. Thank you. And now it's back down by $1.27. But this is to Jim, and it's signed by Jensen because this is a very big day. 25 years since the G-Force. This is
cool.
the legacy. This all got started. Everything got
25 years ago, it's when it got started.
No, not the company, but the key.
The key.
Yeah.
What would you call it?
Technology.
Right.
You mentioned Goldman. NVIDIA is on their list.
So I'm trying to find out what's going on with Michigan. If there's any argument. Some people actually say it could be layoffs. New jobless claims approximately increased. I mean, you got a lot of auto workers there. Yeah, I don't know. I guess we'll see. It's so hard to tell in the week-to-week data. Okay, very well. Let's see what else is being said. Let's see here. Interest rate futures now show slightly greater confidence the Fed will cut by 25 next month. It suggests traders were positioned for a bigger increase in CPI. Oh, now that's interesting. Oh, yeah. We're now, we went from, okay, all right, let's write this down. So we went from, well, we're at a 93.3% chance of a 25 now. And that's versus 80% yesterday. So we did get a nice little pop. Powell has never mentioned Supercore ever. Yeah, actually, I think that's a good argument. Powell doesn't talk about that. 9.3% Germany like it was yesterday. Oh, that's awesome. Thank you for remembering that. Yeah, on the beach in Germany and outside of Düsseldorf. That was really cool. Thank you. Thank you for that. That's really cool. That was fun. Okay, yeah, just refreshed and stayed. We had a lot of auto workers laid off. In Michigan, layoffs were part of reduced shift at Stellantis. Layoffs in manufacturing and management of companies. Oh, interesting. Yeah. Oh, okay. Thank you. Huh. Okay. Well, that's very interesting. Thanks for that. All right. So, yeah, that's tough. You know, it shows you the challenge of what the Fed is up to here, because you're trying to thread this needle of rates coming down while at the same time you're like, oh, you get these little occasional pickups in inflation above people's expectations. Although, bond yields are down. Barely, but they're down. Like the 10 years down fractionally, like 0.4 basis point. And the 2-year, whoa, the 2 years down 5. Okay. So 2-year falls 5 BP. 10-year essentially flat. So that's going to be uninverting. So we should be back up to like, what, 10? Remember, the painful part is between 50 to 90. We haven't gotten there yet. Yeah, we're at 9.5. Okay. 9.5%, or BP rather, uninverted. Now, something else to know is in 2007, when they cut rates by 50 in September, it was like September 18th or whatever, the stock market ran for like another 4 to 6 weeks. In fact, I'm pretty sure it hit an all-time high, just like the S&P hit an all-time high yesterday, exactly 17 years ago. The bummer summer was stocks ended up falling 50%, over the next 8 months after October of 2007. Now, obviously, that's because, markets were starting to price in a recession again. Right now, everybody thinks we're going to stick a soft landing. Markets are pricing in like an 85 to 90% chance of a soft landing. There's like no downside protection. What is this? The percentage of U.S. states with claims rising significantly on an annual basis is above the level that has been associated with prior recessions. I don't want a recession. All the data says recession. And people get very, very mad at me, by the way. Like, you cannot. There is no such thing as a good bear. Like, I just like, pardon my French, but every bear is an asshole. Okay? Like, there's no bear that people like. Okay? Nobody likes a bear. Everybody just makes fun of bears. Because when the market goes up, bears are losers. When the market goes down, bears are evil. So, it's bad. But, man, I tell you, I try to look at the data, and I think I'll tell you if it's good or bad all the time. This one, let me fully look on this. So let me see if I can actually get the chart of this separately. Percentage of U.S. states with unemployment claims rising significantly year over year. Okay, well, who determines if it's significantly? Scott Downard says, you won't get a recession. It's going to be worse. Every recession omen has pretty much gone off, and all the data is looking bad. Scott's all in? All in Tesla? Let's go. Okay, let me read this here. Okay. Unemployment claims rise above recession threshold again. Now that's interesting. Let me write this down. Unemployment claims rise above recession threshold. Okay, this says the percentage of states, so this is percent of states with claims rising significantly year over year. Again, I don't know who defines significantly. On an annual basis is back above the recession threshold. Yields are a little lower after the data. The effect is being dampened by higher than expected CPI. Claims came in higher than expected. This could be because of Hurricane Helene. And it's folly to base any strong assumptions on one number. But it always pays to watch what's happening under the surface. Today's data takes the percentage of states, because remember, you throw in North Carolina, that's just one more state, right? So, or, you know, throw in Florida too. It's 2 out of 50 states. Today's data takes the percentage of states, okay? Today's data pushes percentage of states with sharply rising claims above the 20% threshold to 22%. This implies, okay, interesting. Basically, they're suggesting that there's some like underlying bad juju here. Implies, or how can I use the word belies? Like belies, isn't that like signals something? Because implies, belies. What's belies? Belies. To give the notion or impression of something. Disguise or contradict. Oh, it's used in the negative. Oh, to fail to give the impression of something. Oh, interesting. It's the negative. Okay, interesting. So, implies. I never knew that. Implies broadening layoffs. Stock traders have a far cleaner record on U.S. data than bond investors. Yeah, right now, with equity futures heading lower, while treasuries fluctuate. A combination of faltering labor market, albeit one impacted by strikes in the hurricane, and sticky inflation may keep the Fed more cautious. It's likely to be the worst of both worlds. Oh, fantastic. Recessions in the next 3-4 months go... Okay, as discussed previously, recessions in the next 3-4 months go from very low to very high possibilities with a little in between. Yeah, we've talked about that before. One data point isn't enough. Well, yeah, of course. Okay. Interesting. That is an interesting figure, but we've been there before. Like, that number has gone above that recession signal before. I can't really tell when, though. It looks like that'd be about earlier this year. Let's see if I can recreate that. Percentage of states, unemployment claims. I don't think I can. Change. No, that doesn't do me much good. Oh, well. Alright. Fine, then. What else? Jobless claims far exceed median forecast. Oh, yeah, that is interesting, too. Usually, those forecasts are usually pretty bang on. And this is the largest gap I think you've seen since probably like 22. Interesting. That is fascinating too. It's always in harder times that the data gets more blurry. Largest gap between expected claims and actual claims in about 2 years. Okay. Huh. All right. Then he says, some things in the economy are just a maze. Yeah. Yeah, you're right. Yeah, it's crazy. Oh, TLT hit the 200-day moving average on this data. What a great entry. I mean, like, if you think inflation will trend down and jobs loss will trend up. What a great time then to enter if you're at the 200 moving average. Mostly because look, I have a different opinion than a lot of folks. I'm of the impression that inflation is going to be much lower in the future than people think. And I think we're going to go back to negative rates. Now, a lot of people highly disagree with me on that. And so I just want to be transparent, like, could be the dumbest thing ever. You know, maybe inflation will be higher for longer. I base it just on all the earnings reports that I read, and I'm like, these are not companies that can raise prices. I understand data can be funky, you know, here, there, or whatever. But the trend for me is obvious. All right, Domino's reported this morning. Oh, I want Domino's. Sounds very good. Domino's pizza revenue. Slight miss in Q3, super nominal. But the comp sales came in better than expected. Wait, but where's... Oh, no, I'm sorry. It came in slightly weaker than expected. And the forecast they're giving is they see about a 3% growth. So, Domino's earnings. I'd really like to go through their earnings call. But what did we get here? We got I mean, that's a nominal miss on rev. 1.9% miss on Q3 rev. And then the co-owned comp growth, 3.1% missed by... They were expecting 3.52. They got 3.1, about 12%. Missed by 12%. And then franchise comp growth, 3% missed by... Oh, come on. %15.5%. And then forward guidance, 1 to 2%. International growth, 24 to 25. That's pretty low. And then U.S. same store sales guide, 3% plus growth. Okay, that's Domino's. I do wonder if people go from restaurants to Domino's, you know, when restaurants... Because restaurant pricing, I mean, we all know it's gotten a little ridiculous. It's frustrating to go to a restaurant and see these bills. Okay, so... Domino's reported today, Delta reported today, and Tilray reported today. Tilray missed. Greater likelihood elections to change industry. Oh, you're literally gonna put your success on the election. Oh, the stock's basically flat. But, I mean, don't zoom out. You know. Tilray memed. It's $300? Are you kidding me? My lord. How much is this worth? Market cap $1.4 billion still? So this was like a $300 billion company at one point? That's insane. That is crazy. People go to cheaper pizza. Good pizza's like $20 plus. Domino's with a voucher, 10 to 12. Oh, that's a good point. Celsius ripping. Really? Oh, yeah. They've been collapsing, too. Let me see what happened at Celsius. Stiefel positive on convenience store outlook. Oh, you gotta be kidding me, dude. That's stupid. That's not gonna last. That's a dumb pump. Celsius pumps 8% in pre-market. That ain't gonna last. Stiefel sees positive convenience store outlook. Okay, well, there are plenty of choices in convenience stores. Plenty of competition in convenience stores. I don't see that as particularly useful. Yeah, and you got to get people to spend more too. Okay. Delta's actually doing okay here. New middle class wants clean food service. What's so like? You mean like healthy food? Uh, Amazon running on AWS speed, is that true? Where did we get data on that? Because they didn't report earnings, but they are up 1%. So maybe there's a report. Well, let's find out. A bull bear scale update and your recession thesis. My recession theses, you know, it's like you get it's still pretty high. You know, I'm like of my and mindset that we're at like an 80% shot of a recession. You know, some data has obviously been revised away that was very concerning, like the personal savings rate. So it's still low though. You're still under 5% on the personal savings rate, but it's not as bad as what it seemed. And that low GDI read was revised away as well. So there are definitely some pieces of good news that have come out to sort of balance the recession thesis. But let's look at personal savings rate. Yeah. So the only time we've been lower than 5% on the personal savings rate, I mean, which we've been under for about, it popped up a little bit at the beginning of the year, but briefly in 23 and 24. Only time we usually stay under 5% is before the 2007 recession, before the dot-com bubble, and you really started falling under 5% in May of 99. You last, outside of the COVID normalization, fell off of that in about May of, July of 23. So, July of 23, that could, you know, if it's like 2000, that's still 2 years early, right? So, summer recession. Forget the summer solstice. It's a summer recession. Amazon says streaming service will be profitable very soon. I don't see anything on AWS there. Maybe I'm not looking in the right place. Amazon AWS. Amazon AWS VP of AI is leaving. Okay. And the stock's up on him leaving. I don't really see anything there. Okay. Well, 6 minutes to go. All right. Yeah. So, I do want to know what's going on with the hurricane, too. Hurricane Milton, 3 million are without power. The state avoided the worst case scenario. St. Petersburg Okay, a bunch of pictures over here. Home in Fort Myers with the roof gone. Rapid intensification. More than 3 million without power. This is an apartment complex, like 6 feet underwater. Ton of rain. At least 38 reports of tornadoes. That's crazy. Tampa International expects to reopen Monday. Minimal damage. Oh, that's good. Oh, there are boats that literally got lifted out of their docks. Huh. Well, guess we'll see. Hopefully, very few people died. I did hear someone died because they stayed in a mobile home. Oh my gosh, why? They stayed in a mobile home and maybe a tornado wrecked it. I don't understand why people do that. It's the tornado spawning that's like the lottery of death. And I remember, after hurricanes, it could even be a category 1 or 2. We'd walk around and you almost kind of like, you have to kind of go look at the mobile homes to see what happened. And you would find totally fine street. Like everyone on the street is fine. And then diagonally, 10 houses are gone. Like, so covering like 4 or 5 different streets within the neighborhood, they're gone. Just 10 in a row. And like, they're still there, but like half of them is gone. So I vividly remember as a kid walking through one of those neighborhoods to, see what was it, because that's what everybody does in Florida afterwards. It's like, I don't know, go see what happened. And you're like looking into someone's living room, like their couch and TV are there, but like the house is just like sliced in half. And those were the tornadoes that did the nasty work. That's crazy. Oh, what's the Delta guy got to say?
Somewhat of a little bit of a pause, which makes sense. You think about it, with all the uncertainty, with all the rhetoric, and people are not, and by the way, I don't think this is just going to be an industry story. I think you're going to see it across consumer discretionary purchases as a whole. People are going to take a little caution. They're going to want to find out what happens. They don't like uncertainty when it comes to investing dollars, whether it's buying homes or buying airplane tickets.
Coming on the heels of Pepsi, Jim.
He's comparing buying homes to buying airplane tickets?
When I listened to Ed, and Ed's a really practiced guy, and said he really thought about what happened during this election period.
Weston doesn't have mobile homes. No, this was in Davie, Florida.
There were some storm numbers, so don't go thinking they were doing badly. But second, when Phil pressed them on CrowdStrike.
Somebody here in the chat says, fully short into the open. Oh, well, we'll see. We're 1 minute away. Watch out for coconuts hitting your head, Kamala. Aww. Yeah, I made a pretty thorough Tesla video. If you haven't seen it yet, it's on the main channel. I encourage you to watch it. I thought it was pretty good. I think I went through a lot of different sort of expectations and scenarios. So we'll see, I guess, eh? But yeah, we'll be covering it live, and I think we'll see. We will see. All right, let's get the bell.
You saw it in not the 2020 cycle because it was COVID, but prior cycles, this happens.
I was kind of surprised, but I felt that when PepsiCo did it, that it's not. I don't know. I snapped during a more nervous.
Let's get the opening bell on the CNBC Real-Time Exchange. With the big board, the NYSE Members Handicapped Children's Fund at the NASDAQ, Intelligent Alpha, an asset manager using AI models for investment selection.
Somebody here says, thoughts on the longshoreman strike spawning more strikes? Drove by a major hospital with picket signs this morning. I believe that. I think that could happen, yeah. I don't know how much of a broader impact it'll have, but yeah, I mean, you see one union get a huge pay raise. What was it, the 60-something% over 5 years or 6 years or whatever it was. Of course, sure, that's going to get other unions going too. Especially right before the election. The Biden-Harris admin, they don't want this. Thoughts on bank earnings? I'm not optimistic about bank earnings because banks make just so much money from investment banking. Just been in the toilet. The toilet. So, bobbing around here on the Qs. Doesn't seem like we're getting a very clear direction right now on the Qs. I got a red candle, now you get a green candle. Celsius is falling at the open. Hey, that's what we predicted. Then Delta actually positive after those earnings. Oh, Qs are still going green here. Tesla slipping a bit. I mean, obviously the event's the catalyst for you on Tesla. Nvidia's trying to pop up. Google's trying to pop up. Palantir's at $43. Apple's popping up. That's nice. Robinhood down. What else we got here? Bitcoin's not happy. It's almost back to 60,000. It's wild. What do we got over here? Costco. American Airlines. America. Bonds. You're at about 4.9 on the 10 at the open, and then the 2-year is 3.985 on the 2. That's interesting. So that's a spread of about 10, roughly. Oh, interesting. Enphase. Wow, look at Enphase. Down another 2%. Oh, 103. Peloton's down. Huh. Redfin's down. Very interesting. Okay. So how are they holding up? Oh, the Qs are trying to push it. It's pretty good. Snowflake down a bit. Google just wants to keep going. It's like Google and Apple driving today. Ish. Yeah, here goes Google. Watch, it's about to go green. Google. All right. Let's see what else there is. Nope. Nothing on the doomers. What didn't we see? I want to say, have we gotten the ghoul speak yet? Fed speak. Oh, what do we have here? Lisa Cook doesn't comment. No. Didn't really actually get any Fed speak yet. I thought Ghouls was going to come on. Let me see what the Fed calendar says quickly. Fed speeches 10:10 Lisa Cook, but that's nothing because she didn't comment on monetary. Okay, let me look. 10:10. It's just Lisa Cook today. I thought Ghouls was gonna come on. I thought I saw that on CNBC, but I never saw him end up coming on, and I don't see any takeaway notes. He's the, we need to cut by 200 basis points, guys. Guy. Yeah. All right. So, let's try the doomers.
But we did see a weakening labor market, and we saw hotter than expected CPI. You think about how much of this rally has been fueled by the Federal Reserve and its easing trajectory. How big of a fly in the ointment is this?
I mean, clearly the rhetoric's going to go from stagflation to soft landing to no landing, and now we're going to have an overheating economy story percolating through the markets. I think it's a bit of a tempest in a teapot. The direction for the CPI is still downward from our perspective. 2% target means a symmetric rate 1.5 to 2.5. And I think we're still in that range. It's not going to be a straight line to the bottom. Yes. Now, we have concerns. Energy, for example. I mean, Abigail just talked about the demand for energy. If you look at independent power producers, that subsector has soared in the last 60 days, right? And valuations still look great. So we think there are pockets of this that still make sense from the energy matrix. But in looking at an inflation accelerating story doesn't make sense. So from an earnings perspective, we like the market.
But more on the S word, stagflation.
Yeah.
How do you think the market is really accounting for the risks that that's what we might see?
We think that's de minimis. I mean, we actually think, I would say, let's continue the airline or airport metaphor.
Nvidia's flying.
Soft landing or no landing, let's call it a touch and go landing, right? And so we think we're going to see the economy slow. But remember, it's not just a cyclical story. It is also the secular. If Abigail talked about the greatest year we've seen since this year, before this year, 2021, in terms of all-time highs. What was happening in 2021? Fed funds were going down. We think we're going to see the same this year into next year.
Oh my gosh, that is the most... How are you on Wall? How are you HSBC Private Banking and Wealth Management? How? How are you the chief investment officer at HSBC? And your argument for, well, we saw stocks go up in 2021 as rates were falling, so rates are falling now, so stocks are going to go up. Are you kidding me? Look at the unemployment rate in 2021 when it was impossible to hire people and people were getting 17% pay raises for moving their jobs. Let's look at, oh wow, stimulus money is still flowing. That is the stupidest thing I've ever heard. Oh my gosh, what a dumb comparison. Like, rates were about to lift off, not come down. We weren't worried about a recession. God. Ew. I shouldn't say God. Gosh. But it's just like, why?
It still are very upsetting to consumers, namely the price comparisons they still have in their mind from 3 or 4 years ago. Insurance, as you point out, which is such an important bill for so many people.
Insurance is unstoppable.
I mean, we're talking, 2.8% potentially GDP growth this year, right, Carl?
Well, Atlanta's tracking 3.2 for this quarter. By the way, 17 months of wages outpacing inflation. Wages growing 4, inflation's growing 2.4.
Yep.
That's a tailwind.
But we did have the North Carolina governor, Glenn Youngkin, saying that that's not really happening at this point. Squawk box. That things aren't as good. That the wages aren't.
The North Carolina governor.
No, Virginia, I'm sorry.
Yeah,
Virginia.
yeah.
It was a very
North
strange
Carolina's
interview. I'm sorry.
cheaper.
No,
Yeah,
I was thinking about North Carolina,
talking about Youngkin.
that critical race.
Youngkin.
It's in my head.
They had two on. They had DeSantis and Youngkin.
DeSantis really
very important.
But when you talk about Virginia, which is Dominion, by the way.
Yeah, Virginia's economy has been amazing.
It's fantastic.
Yeah.
You'd say, well, they're doing so well, but I guess they're not doing well because the Virginia governor said that things aren't that good. But this is apropos of what you were saying.
Right. Where's the truth? What's the truth is what anybody wants it to be at this point. So.
Well, what do you make of that?
I'm just going to keep doing what I do, Jim.
On your side.
That's all I can do.
You're so on our side. It's scary.
That's all
no,
I can
look,
do.
I think
and
anyone.
I will be seen soon on local news as you're a consumer reporter. Yes, that's where Carl's got me going again.
I just am very confused, Carl, because one candidate says we're doing great, and one says we're doing poorly. If you go to a sporting event, it costs so much money, we're doing poorly. If you go to the supermarket, you feel a little better. I mean, no, we don't measure ourselves every minute. I mean, we're just not like that. The insurance bill is what is insurmountable.
Blah, blah, blah. Okay, so what do we got here? We've got Amazon at 1.2. We've got Enphase is down 4%. What happened? Let's see. Tesla's down about 0.8, but again, it's all going to be on that event coming up. There were some people that actually made me nervous yesterday. Some people were like, oh, they're going to introduce the ability for you to submit your car to the robotaxi network at the event. And I'm like, you are so high. Like, I really hope people don't have expectations like that because that's like delusional. Okay, so what else? Okay, let's see what else we have here. Yeah, there's no news on Enphase. Huh. If I'm, oh yeah, how's gold doing? Oh, gold's up again a little bit. Not much other news. Enphase, now it's trying to recover a little bit. Interesting. Q's actually rotating down now a little bit. That is very interesting. Okay. All right, let's listen in here for a moment.
The demand that the company take steps to de-risk its so-called mega project commitments for the production of blue and green hydrogen by signing offtake agreements for those projects at what it calls a reasonable return hurdle. Now, according to D.E. Shaw, Air Products expects to spend some $12 billion on clean hydrogen projects, meaning its capital spending, and you can see it there, it's higher than its peers. And given the long-term nature of these mega projects, it's expected to remain elevated for quite some time. That has resulted in free cash flow conversion worsening, its return on capital declining, and that is in stark contrast to the peers you saw earlier. Air Products did sign one key offtake agreement this summer for its NEOM project, with Total agreeing to a deal. The economics are not completely clear, but for both D.E. Shaw and for Manta Ridge, it would appear that is not enough. D.E. Shaw also is taking aim at the company's long-serving CEO, seeking a clear and credible succession plan for a man who is the second oldest CEO amongst S&P 500 companies. Among the activist nominees is a potential successor. I'm told Scott Sutton, he's the former chairman and CEO of Olin, is one of its three nominees. Air Products officials have had no comment on either of the activist campaigns that the companies face, and the company's directors did meet with Manta Ridge's Paul Halal yesterday. Now, in contrast to D.E. Shaw's desire for 3 seats, I'm told Manta Ridge is seeking to take control of the entire board of directors through a proxy contest. D.E. Shaw declined comment. Paul Halal never says a darn word.
Great reporting. Now, Lindy...
But this is an interesting one as well now.
I'm close to Lindy, and Lindy has said over and over again, look, these projects, you can't make money in them. Why would you want to? Because obviously, Apple green hydrogen, Apple blue, I'm going to push all of it because obviously it's cleaner. So, well, look, we're not going to do anything to lose a lot of money.
Right.
Lindy's stock reflects a level of realism about blue and green hydrogen that people think is very unrealistic for Air.
And the enormous amount of capital being spent by...
Explain this.
Can't believe that garbage is...
Just more ads. All right. Well, crazy. So, Robotaxi event later today. Let's see what else y'all have in terms of comments here. But Robotaxi event's going to be the big one today. We'll watch that. I don't know. Should we do a... no, we don't do that. Robotaxi event. I will go ahead and schedule that now really quick. So that way, when we finish out here, you'll get redirected to it, which I think is somewhat useful for you if you want. So that way you can hit the little reminder on it. But otherwise, yeah, I'm kind of curious to see what ends up happening with good old Robotaxi Elon. It's just a big day for that. Right now, Tesla stock's sort of bobbing around. Actually, might be picking up a little bit here. And what else do you have? You've got the Qs. Yeah, they're trying to pick up a little bit as well on this. Palantir 23 to the downside. Apple's down just a smidge. Not bad. SPY's down 30 basis points. Not a big deal. Bitcoin's still bobbing around that 67 line. We've seen that line often. I'm really surprised how much Bitcoin is really getting left behind, relative to just the craziness that we've seen on, all of our, what's it called, other indices. Like, it's trading more like the Russell 2000s, the small caps, than it's trading like the S&P 500 or the NASDAQ. Which I think that's really interesting, because I really thought you'd end up getting a different outlook there. But I guess not. Oh, well. All right, yeah, the redirect set up. So, anyway, take another last minute look here. Yeah, look at that, going right down to 67 now. That's bizarre. Okay. Well, we shall see. We shall see. Small cap Bitcoin. Oh no. Tesla's trying to recover right here. And Nvidia's positive. Enphase still down 3-3. Delta's down a couple. Domino's down a little bit after earnings. I mean, those are nominal moves after earnings. So that's not that bad at all. All right. All right. Very well. So as usual, not personalized advice. And click the little remind me button for the Robotaxi event as that pops up in a few seconds here. See you in the next one, everyone. Goodbye. Good luck.